Hi, Ashwin.
Hi.
This is the channel where we have to make sense of things. And I think being investors today, what with the uncertainty, volatility, etc., one has to be quite smart and also quite creative in order to select some things that can give us good enough returns to, serve the inflation and the rising costs. Yeah. So, Ashwin, I want to talk about the weather. And it's become so hot. What would we do without ice and air conditioners? Malaysia, we're running at up to 40 degrees per day. Now, Morgan Stanley says that by 2030, there'll be a 40% gap between fresh water supply and demand. And a quarter of the world's population does not have access to safe drinking water, and nearly half lack sources for sanitation. Now, isn't that horrible in today's day and age, And in most regions, water scarcity means, well, food scarcity. And at a time when drought and flooding are increasing in frequency and severity.
Well, let me tell you this, Tessie. If climate change is a shark, then water is its teeth. Higher temperatures are straining water availability. Investors need to understand of the risks posed by such shortages to the companies and industries they allocate capital to. This is a very critical and serious matter. French Environment Minister Christophe Béchu raised serious concerns about water supplies in France. Most of Scotland, not typically a country that's thought of being as dry, is now under an early warning for water scarcity after experiencing less than half of the usual rainfall in May.
Wow, Scotland.
Parts of a Lake District river in an area famous for being the wettest part of England have run almost completely dry. And Spain is still struggling with long-term aridity.
Once water gets scarce, Ashwin, it will get more expensive. For water should be free for all of us. Wouldn't that drive up the cost of manufacturing it?
You are
producing it.
You are spot on. Let me tell you what's happening. Diageo, the world's biggest spirits company, says recently that it sees water security as its most significant climate change related risk. Now, a pair of Levi's jeans, listen to this, can absorb 3,800 liters of water. Okay.
Wow.
Water is essential in the production of pharmaceuticals, with about 23,000 of the world's supply used to manufacture medicines. Now, tech also requires water. Google consumed 4.6 billion gallons of water in 2021. Why? To cool their data centers. And Meta Platforms, the parent company of Facebook, use 678 million gallons of water. A 2022 report has now put the potential cost of water risk at $392 billion US.
Wow, this is really serious business, Ashwin. It's really coming to a head, isn't it?
Yes.
So, I always say that this channel is so apt because, we need to cut through this clutter and really zoom in on what will make us the mullah, as it were.
It's called the cutting edge. You want to have the edge.
Yeah, there's so much noise.
Like I said before, everybody's looking at the same chart. We are trying to be different here because we look at things other people don't look at.
Exactly. How to make sense of the stuff that is key, And so, you help us all piece this together. And the thing is, it's very scarce now. Now, how do we make profit from this water dynamic?
Let me explain to you. Okay, all those watching this video. Number one, start investing in quality water producing companies. This is going to be big and this is going to be huge. As water gets more scarce, these companies will make a lot of money supplying water. Now, let me explain to you. I'm going to show you a chart now. Let me explain to you what a quality water company looks like.
Okay. Is this a long-term play, Ashwin?
This is a play of about 12 to 24 months.
Okay.
Those who are looking for short-term, 3 months, 6 months money, you have to forget about this. Look at this chart. This is what the chart of a quality water company in Europe looks like.
Wow.
So I advise investors, okay, when the market corrects itself or when this stock drops, to start buying this stock. And if you can wait 2 years, is ideal. This will give you like 10 to 15% a year. Advise also all family offices to buy this stock because it's a very nice stable return, 10 to 15%.
Yeah.
Okay?
It looks all the way up, so it is stable, yeah?
Yes. So this is what I said. Start looking at quality water companies and we can create a water portfolio for you.
Yeah. And in the meantime, you know, while this thing takes flight, takes a hold, what do you recommend we do?
Yes. So you buy this water company, like I said, you make about 10 to 15% a year. Okay. In the meantime, you've got something more exciting. Managed fund that pays 8% a month, which works out to 2% a week. Now you'll say, why so high? Because the managed fund does not trade stocks. It trades FX volatility, meaning as long as the FX market moves down, this fund makes money for you. So this will give 2% per week. It works out to 8% per month and up to 80% a year.
So they trade volatility as a product, and then it's able to deliver because it doesn't matter whether the market goes up or down. You can still trade and profit from the market.
Why you have no fear? Because they're run by professional traders who have at least 20 years of experience. They know what they're doing. So you become their client, and they do it for you. You don't have to lift a finger.
So while we have the safe equities in the background, those quality names, this is the alter ego sort of to do things shorter term.
You get 2% a week. Okay. Wow. Secondly, you have a staking fund that does not trade. It's a sweetener. It gives you 1 to 2% per month. That works out to 0.5% per week. So all in all, you are making 2.25 to 2.50% per week, which amounts to slightly more than 9% a month. And on a 12-month basis, you will get more than 90%. This is real.
So if you recover your capital, it'll take about what?
8 months.
Oh, wow.
You'll deploy your capital in 8 months. Everything after that is pure profit.
And then the better part is you can withdraw your recurring profits every week or every month, right?
Every week. The shortest time frame is every week.
Wow.
Okay.
Wow.
So what can I say? You're waiting, you're waiting for your water stock to go up because water stocks are not speculative stocks. They're not an Apple. They're not a Nvidia. Water stocks are slow and steady. That is why I said all family offices should look at this because water is something everyone needs.
Yeah. So I'm thinking that, you know, for an investor to make sense of what's going on in the market, we need to find and put our money into something that delivers at least 30% so that we can cover the cost of inflation. And
you will see. I'm saying 15% as a conservative estimate. 30% is no problem in a year.
I see why you're proposing this. It makes good sense considering all that.
It's something that every single human being needs.
Especially you're being able to liquidate quickly and have a recurring cash flow.
And why water? Because as global warming worsens, the water supply will be depleted. This is a serious warning. This is not, I hope it doesn't happen. It's going to happen. It's going to happen. And the poorest countries will suffer the most.
Yeah. Okay, thank you, Ashwin, for today. How could we reach you then?
You can reach us at bit.ly/algotrader. which will land you on our WhatsApp page, and we can clarify all your doubts on that WhatsApp conversation. And
Okay.
I suggest that all of you subscribe to our free Algorithm Ideas newsletter. You will have the link at the bottom of this video in the description box, and you can get fantastic ideas every day free of charge delivered to your inbox.
Like I said, those who have been following this channel have been gifted with little nuggets of tips. And if you've been following, you know these quality names that have been
We don't always
proposed.
give you names. Like today, I'm not going to give you the name of the quality water company because we would prefer you to contact us, and we can build a water portfolio for you.
Right. Thank you so much, Ashwin.
Thank you.